As an Indian company or maybe an Indian business, I would say, you might be taking certain services from a non-resident. And when you make over these payments, the bank might be asking you to get a certificate from the chartered accountant as to what is the amount of tax that is payable on such payments. Now, before you understand as to how much tax has to be deducted, there are a few things that one you should keep in mind. While this is a very, very detailed subject and not possible to kind of comprehend this in one small video, some of the key aspects that one should consider when making payment to a non-resident are discussed in. Now, sometimes a foreign company may set up a subsidiary in India. This Indian subsidiary may not have a very well borrowing track record, and therefore, if it wants to go ahead and borrow some money, it is not able to do so. And generally, the finance which is available overseas is comparatively cheaper than the rates offered by Indian banks. In such a case, if a foreign company, in our example, the Korean company, guarantees the loan taken by its Indian subsidiary in respect of the loan taken from foreign banks, the question is such guarantee fees, which is charged by the Korean company from their Indian subsidiary, taxable in India? Now, in this particular case, what happened was that the tax department mentioned that it was taxable as income from other sources, and the dispute resolution panel also decided in the favor of the revenue. However, one of the issues that was not dealt was whether if such an income was income from other sources, how would the India-Korea treaty come into picture? So in this case, the Chennai ITET held that when we apply the provision of India-Korea treaty, income from other sources is taxable only in Korea and not in India. Therefore, the income by way of guarantee fees, which was received by the Korean parent, not from the subsidiary, but by the Korean parent from its Indian subsidiary, is not liable to tax in India. In these cases, the important thing is the eligibility to tax treaty should be there, for which you need to provide certain documents and a tax residency certificate to the Indian parent.